So you want to own your own business. You can start from scratch, or you can purchase one. Both have challenges. The first, if you start from scratch, you'll need capital, you'll need a business plan, and you'll have an idea, and you'll have to work hard to make it work. You probably will need a location to run your business out of, so you can use a commercial broker to assist you in finding that location. The first part I want to talk about a lease. You would sign a lease possibly for a location, and in a lease is usually 1, 2, or 3 years in duration with some options. The lease can be a gross lease where you pay X dollars per month, or it can be a triple net lease where you pay X dollars per month, plus you pay all of the owner's taxes and other expenses. The leases should be reviewed by an attorney to be sure that you are fully aware of what's in the lease. And that's okay. The second part is to purchase a business. If you're going to purchase business, you should try to get a commercial broker, but more specifically a business broker to help you see what's out in the marketplace and how to evaluate each business. There are 3 ways to evaluate a business. One is by its earnings, second by its assets, and a third by an industry multiplier. There's a book right here. It's called the 2018 Business Reference Guide by Tom West, and that's the Bible of pricing businesses. You can purchase one online and use that. You can use it even if you have a business to study the industry multipliers of the different businesses. The second way is asset value. If a business is not making any money, then the price is only based on what the value of its assets are. And the third way is what the earnings are. And the earnings are what the net income with additional perks that go to the owner added to that come up with something called SDC, seller's discretionary cash. So if a business is making $10,000, you would add other things to that, such as if the owner is using his business to pay his dry cleaning or his automobile expenses. Those are discretionary in how he chooses to use his money. So you'd add those all when you look together, and then you would come up with a multiple for that income. The multiple is usually an average is 2.27 times the seller's discretionary cash. Now, depending on the type of business, it could be less than that multiple or more than that multiple. For example, a landscaping company, mow and blow with 1 or 2 people, would probably be a 1.8 type of multiple, whereas a rental company on Hilton Head would possibly be a 3.0 because it has significant barriers to entry. One of the main things is barriers to entry. Like you can't be a doctor without having all the licenses to be a doctor. Same thing in business. Whatever is required. If it's easy to get into, then it won't be as valuable as something which is a little more difficult to get into. The other thing is when you talk about borrowing money for a business, and a startup, banks would probably not lend you any money to start up unless it's based on your current assets, your home, or something else. In an existing business with solid tax returns and P&Ls, the bank will lend pretty much on that business. And a local bank is a very good place to start. And the Small Business Administration is another one to start that will help you finance that. You would need, when you purchase a business, you need to have look at all the tax returns, all the P&Ls, a copy of the lease, a list of inventory, and inventory is usually paid. There'll be a price of the business plus inventory at cost. That gives you the earnings method of calculating what a business is worth. Then you also have the industry standard. You can use this book to determine what the industry standard is. For example, a restaurant can go 2 to 7 times monthly gross sales, depending on factors of rent, salaries, and cost of goods. If those things are in line, then you'll determine what that percentage is. Let's see if there's, on Hilton Head, some good businesses, for example, a bike rental company where you can purchase the bikes at the beginning of the year, rent them all summer, and then depreciate them and sell them off at the end of the year is a pretty good business. Key to Hilton Head would have a good location for a bike business. Restaurants are difficult in any environment. We have, over 200 restaurants here, so but still a good restaurant, you purchase the assets, and if it's making good money, it would possibly be a good purchase. When you are dealing with businesses, there's a confidentiality agreement, a non-disclosure that you would sign if you're buying a business to keep everything confidential. Let's see if there's other aspects of it. For example, I had a business that was making $150,000 a year, so 2.27 times that would put it at around $350 or something for the business. But that's a listing point, and then what somebody is willing to pay for it and what a seller is willing to sell it for, those determine what the actual price is. But in conclusion, I think it's important to use a business broker to help you whether you're selling or buying a business. Thank you.